America, once hailed as the world's strongest economy and a land of boundless opportunities, now faces a critical juncture where its future is under intense scrutiny. The national debt has surged to $36 trillion, representing approximately 127% of its GDP. To grasp the magnitude of this figure, consider that it equates to about $104,497 per person and $266,275 per household in the United States. This escalating debt is not an isolated concern. It has far-reaching implications for the global economy. The crisis originated from a persistent budget deficit, with the U.S. government spending more than its income and borrowing to cover the shortfall. In 2024, the budget deficit reached $1.7 trillion, a trend that continues to worsen annually. Additionally, the government allocates $882 billion annually to pay interest on its debt, surpassing the defense budget. Such substantial interest payments divert funds from other critical areas, affecting various sectors of the economy. The ramifications of America's growing debt extend beyond its borders. A weakened dollar, resulting from increased debt levels, can lead to instability in global trade and investment. Moreover, if the U.S. fails to meet its debt obligations, it could adversely affect countries like India, China, Japan, and those in Europe, heightening uncertainty in international markets and potentially triggering a global economic downturn. Domestically, the crisis has led to significant cuts in government spending, impacting social programs, infrastructure, and public services. Essential benefits such as Social Security and Medicare are now at risk, leading to increased social unrest and a decline in the standard of living for many citizens. This economic turmoil is also fostering political instability. Addressing the crisis requires implementing stringent measures, including reducing government expenditures and raising taxes, actions that are politically challenging. Additionally, fostering new investments and job creation is essential to strengthen the economy, necessitating technological advancements and the formulation of new policies. The pressing question remains: will America take timely and effective action to navigate this crisis? The potential global impact of this crisis is profound. A U.S. economic recession would not only affect the American economy, but also have destabilizing effects worldwide, influencing global trade, investment, and financial policies. The U.S. economic crisis could significantly impact global stock markets. A slowdown in the U.S. economy leads to reduced corporate profits, causing volatility and declines in stock markets. Given the importance of major U.S. companies to global investors, their underperformance can adversely affect stock markets in other countries, including those in Asia and Europe. In summary, America's escalating national debt and the resulting economic challenges pose significant risks not only to the nation, but also to the global economy. Immediate and decisive actions are imperative to address this crisis and mitigate its widespread effects. However, this won't be easy, as the impact will directly affect citizens. Additionally, decisions like increasing taxes will be necessary, which are politically challenging. To strengthen its economy, the U.S. needs to attract new investments and create jobs, which requires technological development and new policies. But the question remains: will the U.S. be able to take these steps in time? This crisis could have profound and widespread effects on the entire world. If the U.S. experiences an economic downturn, the consequences will not only affect the American economy, but also the global economy, potentially spreading instability worldwide. The U.S. is one of the largest and most important economies in the world, and its decline could significantly impact global trade, investment, and financial policies. The U.S. economic crisis could heavily affect global stock markets. When the U.S. economy slows down, American companies' profits decline, leading to stock market instability and downturns. Since shares of major U.S. companies are crucial to global investors, poor performance of these companies will also affect stock markets in other countries, such as in Asia and Europe. These stock markets are deeply connected to the U.S. market, so any downturn in the U.S. will directly affect stocks in these regions as well. This can lead to global investors pulling back their capital, causing uncertainty in investments, weakening financial conditions, and triggering market declines. The impact of America's falling economy will be felt most acutely by countries heavily dependent on it, particularly in terms of exports. The U.S. is the world's largest consumer market, serving as a primary export destination for countries like India, China, and those in Europe. If the US faces an economic downturn, its consumer demand will decrease, affecting exports from these countries. India, for example, is heavily reliant on exports to the US, including IT services, pharmaceuticals, textiles, and other products. A decline in US demand could lead to significant losses for Indian exporters, impacting employment rates and the financial situation in India. This could also weaken the financial stability of Indian companies and signal a downturn in the domestic market. In Europe, the US is also a major trade partner, especially for countries like Germany and the UK. If the US faces a recession, European exports will be negatively affected, leading to a slowdown in trade activities and economic growth. Another serious consequence of the US recession could be the disruption of global supply chains. Due to falling demand in the US, many companies may reduce production, leading to lower demand for products from China, India, and other countries. This could result in industrial slowdowns and job losses in these countries, particularly in the export of technological products, vehicles, and consumer goods. The US debt crisis is not just an issue for its own economy, but a warning for the entire world. This crisis teaches us how crucial financial discipline and stability are for any nation. The ongoing question remains: can the US recover from this crisis, or will it push the world towards a new economic downturn? What are your thoughts on this matter? Please share your views in the comments below. If you liked the video, don't forget to like, subscribe, and leave your opinion in the comments. Thank you.